Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, September 17th, 2013. Well, a continuation of the trend to the upside today in a candle that's made a higher high and a higher low. Previous day's trading we had an uptrend in place. We had some very interesting trading throughout the trading day. Early strong sentiment towards the buyers as the market gapped up, establishing the window, and then later in the trading day as the market was trading above the 1700 level, we saw the sellers lose commitment as the market was trading above that area, for the market to close around the midpoint level, suggesting that neither side had control of the market when the market closed. Today, quite a different trading day. The market has just taken out the previous high, but we have a fairly large white body candle denoting the buyers making some solid net bullish progress on the day between the open and the close, and with the market trading up and closing up towards the high, suggesting that the buyers have now closed with control of this market once again, and suggesting that this market has built some solid momentum to at least test up to this major high around the 1709 level. Importantly, the market has closed in a bullish manner up above the 1700 round number level of resistance, and that is significant for this market. It does suggest that there is a strong likelihood of the market testing to the 1709 level or even beyond. Now, if the market does come off from this level, we still have the window that was established for the previous trading day as very solid support for this market, and then just down below there the area around 1687 and the area around the top of the cloud, with the cloud extending down to around the 1635 level, so very, very solid support down below. Now, if this market can trade up through the 1709 level in a bullish manner, it's all blue sky from here, so no levels that we can go by based on previous areas of support and resistance. So we will have to rely on the Fibonacci techniques if the market does trade up through there and close up above that level. In terms of the Fibonacci extension, we have the 423.6% level at 1708 coinciding with this major high around 1709. So a very, very important area of resistance, and therefore strengthening the resistance at the major high. So not a foregone conclusion that the market will trade up through that level and trade to higher levels. But if the market does close up above those levels in a bullish manner, the next area that we have to go by is the 685.4% level, and that is very, very much overextended. So it seems as though our Fibonacci techniques aren't going to really be of much help to us, and that's basically because we've seen this market with a very bullish activity in this first time frame uptrend, and through all of this period from down around the 628 level, we haven't technically had a change of trend in that first time frame trend based on the highs and lows up until this level, and the trend still continues. So very, very bullish sentiment in this market at the moment. And looking at all of this trading, we've only had two black body candles, and both of the bodies have been very, very small. So it really does say something about the strength of the buyers in this market. In terms of the Fibonacci retracement, here today we've seen the market test exactly to the 423.6% level with some slight rejection. But this candle is a very, very bullish candle. I suggest that the market has a strong probability of trading through that 423.6% level and at least trading to the 1709 area. After that, once again, all blue sky based on the Fibonacci technique as well. No major resistance until the market trades up to the 685.4% level, which is a long way above where the market's trading, and it's unlikely that the market will trade up to that level all in one go in this first time frame uptrend. In terms of Ichimoku, obviously a bullish market in all three timeframes, with the market trending up above the cloud and maintaining price action above the cloud, so quite a strong bullish sentiment in that long-term time frame. In terms of the Kijun-sen and Tenkan-sen, the market is still trading above the Kijun-sen, the pink line, so bullish in the medium-term time frame, and above the Tenkan-sen, so bullish in the fast-term time frame. We had the crossover of those indicators for the previous day's trading and giving us a buy signal with Ichimoku, confirming the buy signal that we had prior to that with the breakout up above the cloud. And we are seeing some strong follow-through after that bullish breakout up above the cloud. and that signal that we had was a neutral signal, and it occurred whilst the indicators were within the cloud, so not a strong signal, but by the same token not a weak signal, and we have had good confirmation of that signal with today's bullish activity and good follow through. In terms of the Chico span, we have had now a change of sentiment with the Chico span, and that is now trading above the corresponding price action. So that's confirming the bullish activity that we're seeing in the market, suggesting that the market has now found some solid bullish upside momentum in a longer time frame, and suggests that there is a good likelihood of this market testing to the 1709 level and even beyond. Now, if we do see the market find resistance around the 1709 level, we see selling coming in. We could see the market find support around the 1700 level, acknowledging that the previous resistance has the possibility of turning into support, and then if the market does trade down through there, we could potentially see solid support at the window that was opened up, which is around the 1691 level down to 1688, a solid level just down below there, and then as mentioned the cloud and the Ichimoku indicators trading within the cloud, so very solid support down below, but the resistance here for this market is certainly not as solid as that. So a likely scenario is that the market trades up to the 1709 level, perhaps even just beyond. Potential for the market to come off, some profit taking might happen up around those levels. The market to find support down around the 1700 level or just below, and then bounce back up to continue the trend back on its way. But we can't preempt the market. We need to react to this market. So the next area that we're looking for to react to the market is the major high around 1709, or if the market comes off at the round number 1700 support.